Hello, what is up everyone? Welcome back to my channel. I am Financial Coach Jess, and in today's video, I'm going to be expanding on this message right here that I got from one of my one-to-one clients that received a 100-point increase in their credit score, and they aren't the only one. And credit scores are important. Your credit score is a number ranging from 300 to 850 that reflects an individual's credit worthiness. And I say worthiness because it's all theoretical. In theory, someone with a higher credit score is more likely to pay back all of their debt and pay on time. But it's really only a very small snapshot of a much larger picture. And here's why you should care. By having a higher credit score, it can save you tens of thousands of dollars. And here's an example. By increasing your credit score of just 100 points, you can save $22,000 plus over the lifetime of your mortgage. And here's how the math works out. Let's say you buy a home worth $300,000 at 4% interest with a 20% down payment and a 30-year fixed loan with a 780 credit score. That's right around $1,164 a month, not including taxes, insurance, or homeowners association fees. However, if your credit score is 680 and your interest rate is 4.5% as a result, at that interest rate, your monthly payment would increase to $1,216 a month, an extra $62 a month, or $744 per year. The difference in the rates may not seem very significant at first, but you've got to look at this over the 30-year term. Over the entire length of the mortgage that you'll be paying back, you're going to be paying an extra $22,000 plus because of your credit score. Thankfully, they've made it pretty easy to play their little credit score game. So here's what you need to do in order to raise your credit score 100 points too. Step number 1, get a free copy of your credit report. And this is different from just your credit score. This is a report that is going to have all of your debts listed. Also, make sure you get your free credit report, which is authorized by federal law. You get one free credit report each calendar year, so if anyone tries to make you pay, it is a scam. You can order all of this online through annualcreditreport.com. Once you have your free credit report, go through it very meticulously and make sure that all the information is correct. This happened to one of my clients. She had a very low credit score and we couldn't figure out why. She got her free credit report, went through it, and found out that one of the debts on her report had been in collections for a while, except it wasn't hers. It was a complete stranger's debt that had been mixed up and assigned to her and had been on her credit report, pulling her credit score down for a long time. She simply called the lender, explained the situation. She had to prove who she was and that the debt wasn't hers, and they got it taken off, and it helped her credit score drastically right from the beginning. To further use the mortgage example, this is definitely worth your time because the time that it took her to get the free credit report, check it for errors, call the lender, explain the mix-up, I mean, she earned or saved tens of thousands of dollars just in that short amount of time. Trust me, the ROI, the return on investment, with this is potentially incredible. It's also a great return on investment if you like this video here today, if you're getting value here, and subscribe to my YouTube channel. Step number 2, after you confirm that all of the information on your credit report is correct, go through your credit report and bring all of your delinquent or late payments up to date and current. Or if you have debt in collections, you need to go and settle that debt as soon as possible. And I take you through that entire process step by step in this video here. This step is very important. Something that lenders can do when you have delinquent debts or late payments is ding your credit score. The sooner you can get everything caught up and current, the dings on your credit score and the late payments will get further and further away. Something else that you can do in this step is actually call up the lender, explain the situation that you're getting everything caught up as soon as you can, and ask if they would take those dings off your credit score in good faith. Keep in mind, they can say no, but it never hurts to ask, and some of them might say yes. Step number 3 is to pay all of your debts and bills on time every single month moving forward. I personally have all of our bills on auto pay, and that's what I work toward with my clients as well. This really helps with that credit worthiness that I talked about in the beginning of the video. The more they can see that you're paying everything and you're paying everything on time, the more likely they are to lend more to you and to raise your credit score. Step number 4, after you have auto pay set up and you have 0 late payments moving forward, now I want you to start aggressively paying down the credit card debt. Credit card debt in particular is different from other debt because it shows credit utilization, which is a huge portion of your credit score. So let's say the bank says, we're going to lend you $1,000 on this credit card that you can use, and let's say you pay it off every single month. This is great for your credit score because it shows you have a very low credit utilization. On the other hand, let's say same lender gives you $1,000 on a credit card and you max it out and it stays maxed out each and every month. This is going to drastically hurt your credit score because it shows that your credit utilization is very high. They're less likely to lend to you because you are more likely to max it out and then start to miss payments or start to have late payments. It doesn't show a lot of self-restraint. When my clients start attacking credit card debt and they finally are able to pay them off, we leave the credit cards open at 0. If you take it a step further and close the card, you lose that credit utilization, and that ultimately could hurt your credit score a little bit. It can be very confusing for my clients sometimes because when they pay off their car or their student loans, sometimes they will see a slight dip in their credit score, but it will go back up shortly after. Just remember to stay the course, trust the process. It will go back up, but this is why we leave credit card accounts open but empty. Number 5, after you've done all of this, call your credit card company and ask for limit raise. I personally try to do this about once a year with our credit cards, and that is basically you call up your lender, or sometimes you can even do it online, and you submit your income levels, you submit what you would like the increase to go up to, and then they can either say yes or no. Going back to credit utilization, once all of your debts and bills are up to date, you're making on-time payments, there's not much else you can really do there. But credit utilization, you can continue to increase every year like I do. We know that our credit score is going to be absolutely vital when we start investing in real estate, and so we strive really hard to stay on top of our credit utilization, making sure we ask for those raises and making sure our cards are zeroed out every single month. Also, do beware of scams and credit repair services. They're not really doing anything that you couldn't be doing yourself. So get your free credit report, get your debts up to date, make sure you're paying them on time, pay down your credit cards, and then get those limits up to increase your credit score 100 points or more. If you got value here today in this video, I would absolutely love it if you smashed the like button, subscribe to my channel for the YouTube algorithm, and I'll see you guys in the next one.